is Lucky, guys. For those who don't know who I am, my name is Lucky, Lucky, Lucky. So yeah, I'm here again, guys. Welcome you those who are new on my channel. So today I want to talk about something very important, guys. Very important. So we're going to be breaking down things called fundamental analysis. So I want to share like what is fundamental analysis first, and I'll be mentioning what is going to happen tomorrow in US, in America, there, because there's this election that's going on right now. It's called a presidential election. So it is happening right now as we speak. There are votes and so forth. So it's going to affect, I believe it's going to affect the things, the market tomorrow going forward. It's gonna affect it like a lot. But I believe like if you can like use that thing, that movement, or whatever is going to happen tomorrow, we can use it to in our advantages. We can make a lot of money, because like forex trading, we make money, they will make money. But for you to make money, you need to know exactly what are you doing. You can't just make money if you don't know exactly what you're doing. You got to understand each and every aspect of every factor that are happening. So I'll just going through everything, trying to share what I gathered. Yes, you see. So yeah, but first thing I want to say, I want to talk about is what is fundamental analysis. Like to myself, like fundamental analysis is when you is a fundamental analysis is where you measure like the factors, businesses, investors, all these things. You see, okay, this is happening, and so forth and so forth. Then you know, okay, where are the investors who are going to invest the money? If they're going to invest their money on gold or on Nasdaq or on US dollar or whatever, that how you determine those things. You use these indicators. We have the websites, we have everything that can give us this information. So we have something called CPI, NFP, GDP, and so many other factors that moves the market a lot. So you got to know what is happening, what is that, how to measure, how to calculate these things, you know. So for example, I want to talk about something. First thing I like to talk about right now is CPI. What is CPI? Like CPI says here, it's a consumer index, a consumer price index. Like it says here, it's what it measures monthly changes in price paid by US customers for a basket of goods and services. And it is an indicator that is used worldwide, all over the world. And also it happens like each and every currency, like in US dollar, AUD, Australian dollar, Canadian dollar, each and every currency out there, it has like a CPI, this consumer price index. So it happens every month, of each and every month, everywhere. So if you know, okay, if the inflation, deflation, whatever it happened, like the prices are on this currency, like they're increasing. So when they increase, they know the investor will remove their investment on that particular currency of man. So we need to know, okay, what was the previous result, the previous month, and what are these results are going to be like. If it is going to be less or more, you're going to, okay, if it's less, you're going to sell. If it's, you want to see this thing, so you got not to know, okay, buy, sell. You need to understand the depth of it and get a point. So let's move on. And there's something called NFP. NFP, it says here non-farm payroll. So it is also measured every month. Every month it shows like each and every US dollar and other. I think it's only US dollar here. It's only US dollar. I believe so. It's only US dollar, because it says here. Let me read it. It says here. Non-farm payroll measures the number of workers in US, okay, except those who work in farming, private household, and non-profit and self-employed. So it measures the US unemployment, like people who are unemployed, or the employment rate, and so forth and so forth. Let's say, for example, if now it's November, right? It always is usually after each and every month, around oh no, in the beginning of the month, around the first Friday of each and every month, we have NFP. We have NFP. It tells, okay, in USA. So we saw the previous month, okay, this amount of people were employed. Now the following month, this number of people were unemployed. So that will that will affect the market or the US dollar there, and other things that are under US dollar. You see, so for example, if we have less people are unemployed this month, so we can, it's a good thing we're gonna buy dollar. The investors as well are gonna invest even more because dollar is going is getting more strength on what, on that particular area. And man, so we got to be very careful on that one. It's only in US dollar, that one. So but it affects gold, it affects Nasdaq, it affects other currency pairs, like if you're trading something called USD CAD, it does affect it. If you're trading something USD JPY, USD CHF, whatever it associate with US dollar, it does affect NFP because it's based on US dollar. You get a point? So we got to be very, very, very careful. Let's move on and go with something called GDP. GDP says here is a gross domestic product. You see? So also I don't trade a lot of this one because like it happens sometimes. I don't know. I don't follow it a lot, but it's also like one of the major things that plays a big movement or big effect on what, on the market sometimes. I don't know when it does happen, but it does happen, and it makes a lot of movement sometimes depending on the values of what is happening. You see, so but the main thing I want to talk about today is like these elections that are happening in USA. Yeah, so we see, okay, Donald Trump and this lady are running for president and so forth and so forth. So we got to be very careful. Okay, if let's say, for example, let me it's just an example. I'm not saying that, or it is like this. I'm just making an example. Noise. So it's like, let's say if we know like President Donald Trump is gonna be president once more. So if we know, okay, this person can take like the country like to very, very, very bad position. So the investors or everyone like who invested in US dollar, so they know US dollar or USA will lose a lot of things because of this president, which is going to be elected by the people. So immediately this person is becoming a president, investors will move or will take their investments elsewhere, like invest on gold and so on and so forth, because of this presidency, which we don't trust as the people. Got a point? But if we say, okay, this lady like manages to be the president, the first female president, okay, sure, cool. Okay, but what is going to happen if she becomes the president? Okay, the country become this and that, which is a good thing for us, you know. So let's invest more on what, on dollar. Why? Because we know she will take the country as a whole to another level. You get a point? So we invest on what is exactly happening. As example, as I said, with GDP, CPI, NFP. If the results are positive for us or for the country, we invest more. But if the results are negative for the country, we're gonna invest our investment elsewhere. So we got to be very careful of what is happening, where and when. Get a point? So it's very, very important. I want to show you these things on my laptop right now, and after that, I want to show you these videos. There are two videos that I recorded earlier. We'll talk about more of what is happening exactly on this thing of presidents and stuff. We're gonna see. It's very interesting. Pay attention and take. I think it's 3 minutes long or something. But I want you to relax, not rush. Relax and listen exactly what's gonna happen, because we can take what they're saying here. We can take that and use it to our own advantage. We're trading tomorrow. Tomorrow is the 5th of November. So each and every month, each and every 4 years, we encounter like elections, and I think in every country, like here in South Africa, America, every 4 years elections take place. And when the elections take place, one thing I've noticed, like during that day, there's so many like consultation that's happening. Like the market is not sure, is either going to go up or go down. It's not sure during the day until the results come out. Then the market will decide, okay, no, let's move this way, because of what the people who are investing, or the people who will be taking their investment elsewhere because of the results that had take place. Get a point? So it's like that. Let's jump deep now and listen to these videos, guys. Pay attention here. Pay attention.
talk about all of the different discussions that people are having here. Obviously, it's the election. Obviously, it's what's going on with the global economy. But how much is it the divergence between the situation right now in Europe versus the situation in the United States?
Well, it's been a very busy day, but I'd say that the topics are not very different from what they were a year ago. So we're still talking about how do we get growth to accelerate. And yes, Europe is growing less, but actually on a relative basis, Europe should do better next year than this year. In the US, we're seeing a slowdown. So it's about world growth. How do we get growth going again in an economy that we're very happy that it's still growing and that it's a soft landing, it seems, but we need to get growth to be faster.
How much are people talking about the necessity of scale, of size, of scope at a time when we're talking about UniCredit possibly taking over Commerce Bank, when we're talking about the fact that the behemoths in the U.S. are getting bigger? Is that something that's expected to continue?
No, absolutely. And, Santander is one of the biggest banks in the world by number of customers, which is what matters. We have 168 million customers across Europe and the Americas. So we have the scale. We have the global scale. We have the in-market scale. And that is a unique combination. That's what matters. We have investments in technology that are in the billions. We are rolling out global platforms. We said today that we'll have a fully digital bank by the end of 25 in the United States. We launched it a few weeks ago. So yes, scale matters.
Scale matters, but I'm curious, because Santander hasn't made a big acquisition in years, what you're thinking about in terms of large-scale M&A in the current environment in the near term.
We haven't made a major acquisition because we don't need it. We are growing profitably. As of June, we were growing our top line at 10%. We have grown 60 million customers in the last 10 years. But very important, we're growing profitably. And we're rolling out our global platforms now in retail and consumer with our own tech stack. And so we're able to compete, with our current size. And we're going to continue to invest in technology and in people and different skills and making sure we are there where our customers want us to be. We just launched in Germany with Apple and Amazon, our digital merchant, Xenia. So we feel we have what it takes to be competitive in today's world.
And in the U.S., Santander is pushing really hard to grow through its corporate and investment banking unit, as well as the launch of Open Bank. I'm curious to hear what you think your competitive advantage is as you look to compete against the existent big investment banks and retail giants here in the U.S.
We're mostly retail, commercial, consumer bank. So we are at scale auto lender in the United States. We're number 5 here nationwide. We're the number 1 auto lender in Europe and LATAM. So we have the scale. We've proven that for many years. We have a retail bank that we have said a year ago we're going to make digital through the global platform, and that's what we've done a few weeks ago. So we are bringing our global scale to benefit our regional banks so we can accelerate deposit taking in the United States. And this is really unique.
Santander has a reputation of providing consumer loans, like you say. And right now, there's such a big question about what the consumer health really is, how able people are going to be to pay things back at a time where a lot of policymakers are saying, we're reaching it. This is the soft landing nirvana. And a lot of consumers are saying, we just don't feel it. How do you see the performance of these loans? Are you seeing signs of the sentiment that's more negative seeping into those loan performances?
So we're not seeing an increase in non-performing loans beyond the seasonal, trends. There's always seasonal trends in the consumer. And so, if you asked me this question a year ago, beginning of this year, we're actually better than we thought it would be. So nothing out of the ordinary, absolutely in line with what we expected, even marginally better than we expected.
So if there's nothing really wrong with consumer credit, the economy is not going wild, but it's not terrible. Is it really just the concern about the election in the U.S. that's kind of holding people back from being overly ebullient or coming up with big plans?
So yes, inflation is hitting a lot of the consumers across the United States, has been hitting, it's cumulative, right? So it's been going on, even though it's coming down, it's better. But yes, we feel that both on and talking about the U.S. now, so we feel there is pent-up consumer demand. So we think there will be a pickup, for example, in car purchases. We get the feeling consumers are holding back a bit, and businesses too. I believe that you could see a pickup in investment after the election.
Ana, I want to ask you about private credit as well, because a lot of banks are partnering with investment firms to set up private credit partnerships. I'm thinking about Citigroup and Apollo, for instance. What is Santander's thinking about these kinds of tie-ups and the opportunities that they may present? Are you doing anything similar or thinking about it?
No, absolutely. We've been a leader in the originate to distribute model because banks are no longer the best holders of many of these loans because we have increased capital requirements. We have the distribution, as I said, 168 million customers, 4 million corporates across the world. So we are originating a lot of loans that we are then placing with the private equities. We work with all the major firms, and we believe that is something which is, good for our shareholders, and we believe, this is something we will continue.
Anna, before we let you go, I do want to say, looking forward, what do you think is going to be the most important development in this next year for the banking sector? We talk about regulation. People don't want to talk about regulation. They're like, that's boring. But we talk about the geopolitical sphere, and that could be something. Or is it the path of interest rates and just how much they actually can go down in the divergence between the U.S. and Europe?
So the big question is, the structural trends that are inflationary. Right. So if you think about demographics, you think about defense spending, you think about climate transition, those are all inflationary trends. So the big question is, what is the terminal or neutral interest rate that is going to, let's say, be more consistent going forward? Probably the U.S. has a higher one than in Europe, 4% versus 3%. The question is, can the economy continue to grow with that level of rates? And the answer, it seems, yes. What we've seen in the last couple of years with relatively high rates, companies have continued to invest and the economies have continued to grow, maybe not as much as we'd like. So, for a bank like ours, interest rates in Europe of 2 or 2.5%, high employment levels. That's why, our non-performing loans are doing well. We're growing. We have a very large amount of very small accounts. And so as long as interest rates are 2, 2.5, we're going to do pretty well on our margins, and we're going to do pretty well on provisions. So it's not a bad place for banks.
Let's take the banks, for instance. The banks say the economy is okay. Retail sales just last week said the economy was better than okay. I want to go back to September. You absolutely nailed the 50 basis point reduction at the Federal Reserve. How have your thoughts on the next move from the Federal Reserve evolved over the last few months as you go through the earnings from corporate America and you look at this economic data?
Yeah, thanks for having me back. And look, the outlook for rates here, I think, do matter. And we're at a really important crossroads with the election that's coming up and a number of key macro events into the end of next week, as well as all throughout the first few weeks of November. So I think, we get these macro events every so often. We had it in the last week of July through August. This one could, in theory, it should be actually much larger considering the implications around the election and the Fed and an NFP all kind of coalescing into that, short time frame. Look, I think the Fed has to still cut rates, regardless of who ends up, become the next president. But we're going to see, much lower rates because the Fed is still restrictive, and we're still challenged with calibrating the fiscal policy as a substitute for Fed policy. And I think those days are gone unless we get, some sort of reason to go spend and really increase fiscal balances even further. I think that the Fed policy still is important to the economy.
So, George, with the rate move in mind, with the developments in the bond market of the last few days in mind, are you suggesting that absent a red sweep, a GOP sweep in about 2 weeks' time, this market's kind of hitting its limit on bond yields right now?
So, absent a red sweep, yes, I think so. I think so. I mean, we are we're really concerned about the potential for much larger tax cuts from a red sweep, which would that entail that we shall see. But it would really come down to I think 4.5 on the 10-year note will start to matter for other markets, not just for the bond market. We got a little bit of evidence yesterday, given equities finally having a bigger move to the downside. So I do think 425 on absent a red sweep is getting pretty close to the high end if we don't get a red sweep.
I am thrilled to be here, actually. I hear we have a really busy earnings schedule. We, of course, are waiting for Tesla, and it's a big down day in the market. Guys, we have so much to talk about.
It's not just Tesla, but, Tesla is certainly the focus. We got T-Mobile, Western Union, Whirlpool, Lam Research, Viking Therapeutics, IBM, Las Vegas Sands, and more, Scarlett.
Yeah, it really feels like the election is getting closer, too, with so many people trying to put on Trump trades or talking about it in a way that they weren't just 2 or 3 weeks ago.
It's kind of interesting too. Yesterday we were talking about this idea of those back-to-back declines that we saw in the S&P. First time that happened in 6 weeks here. But of course now we're setting up for a trifecta of declines. And depending on how things shake out over the next, 45 seconds here, it's possible the S&P could drop 1%. Again, something that it hasn't done in about 5 weeks or so.
So what would that mean if that does happen?
I don't know.
Like, I
You
mean,
tell me.
Okay, let me show you something. I want to show you something. I want to show these two websites that I go to for this information, like the GBP, CPI, NFP, and other indicators. So let me go first. Let's talk about the first thing is invest.com. The website is invest.com. Very beautiful website. Yeah, it's very beautiful. It gives a lot of things that we can use there. Is this one. So it shows like everything, like if you want like the breaking news, if you want like the market and the whatever, like the news, US. Listen here, you see you have the US elections and stuff. You read what's happening and so forth. You also have the charts here, the prices, all these things, time, everything is here. Everything is here. You just need to read and analyze using these things. We have the market here. We have everything we can imagine. We get it here. So even let's go to news. We have crypto. We have everything. We have a lot of things that we have here. I want to show you something. I don't know, where is it here? Oh, it's market. It is market. Yeah, it's somewhere here. But for this, like investing.com, I don't really have to use it a lot, but for news and everything, I use this one for news. If it's news, if it's breaking news and so forth, I go to investing.com. But if they are if it is what you call it, if there are events like news events and stuff, where it's something like CPI, NFP, and so forth, like news release. Yeah, that's a good word. If it's news release, I go for this one. It's called what? It's called Forex Factory. Yeah, Forex Factory. This is what I use for. This is what I use for Forex for news release. News release. I use this one. Very beautiful. This one. Very clear, simple. It's not complicated for me. For me, it's not complicated at all. So I like to use this one. We have like. First, what I did here, I did use this filter here, and I only said I want only high impact news. But first, it's not like this. If you remove everything, you have all these things. It shows the time, the date, and what is exactly is happening, and also shows you on which currency this is happening on. Get a point? So it's very important. It's very, very important. So I like it so much, but I don't like to put it like this, like everything. Now I don't like to use. I like to go here on filter, then remove like this one, and remove this one, and remove this one, and leave the red one. The red stands for high impact news. This is impact news. Events are inflation, growth, unemployment, central banks, bonds, housing, and so forth. All these things. So we mark them. It's fine. It's fine. We mark all these things. But only say high impact news only. So we know, okay, today is the 4th, tomorrow is the 5th, 5:30 in the morning, AUD. We have these things. Usually I don't trade this thing. I don't even look at them. But one thing I look at is CPI, NFP, those things. But NFP, like nowadays, is becoming like too volatile for me. Like if it's going to go down, it starts goes up and go down and go up and go down, then it goes down again. So I don't like it. It's always tap people's stop losses. Like I don't like to trade it because it's too volatile for me. It's too volatile. But CPI, I like to CPI because like it's not volatile sometimes, and we make money there. We make money there, my friend. So CPI is nice, but if you make money, but sometimes you can make losses. You get a point. So you can't hide from that. You can't run away from it. So sometimes we do make losses, even trading news event, news release, CPI, and we make losses. Sometimes we make money, but we need to be very careful of one thing. Always keep this thing called risk management. You need to manage your risk. If you have this much, you know how much I'm willing to lose. I'm going to risk this much, okay, because I have this much. Because if you risk everything, hey, my friend is going to be in problem, going to be in trouble, I'm telling you. So I will show you this before I continue. I will show you what happened last week Friday. Last week Friday I was trading. It was the 1st of November, last Friday, 1st of November. So we had the CPI on CHF. So it was a beautiful one, beautiful. I did analyze like before I went to bed on Thursday. I analyzed everything I saw, because we have this thing called over here, we have a previous. This is what is the result of the last month. It was negative 0.3%. Okay, the forecast is they predicted, okay, it's going to be 0.0%. Ne? Cool. But the actual result, this is the actual result was like negative 0.1. Okay, sure, there's a little to no difference there, but the market moved on Friday. Whoa, my friend, the market moved on Friday a lot. But the thing is, I did analyze, I did everything, I did mark, I did wake up in the morning, prepare my things, because the market, the news release was going to be at 9:30 in the morning. So I wake up, I prepared everything, I was there, but my analysis was incorrect. So I said to myself, okay, no, let me sell, because what I gathered says now, CHF is gonna gain strength. So if I trade USD CHF, listen very careful right now. Listen very careful right now. This is very important, very important. Listen, as I gathered information, I said, okay, CHF is gonna gain strength, ne? Cool. But if I trade USD CHF, what I'm going to do there? I'm gonna buy, right? No, I'm gonna sell. Listen very careful. This is confusing. Even me, sometimes I get confused somehow. But it's very, very, very important. Listen very careful. I will try to explain that one more time. Like, I got that information, and it says, the information said, okay, CHF is gonna gain strength. It's gonna be like, the results are gonna be positive for CHF. Okay, cool. Since the results are gonna be positive for CHF, as I will be trading USD CHF, so I will be selling USD against the what? The CHF. Get the point? So it confuses somehow. I don't know what happened that day, like it was Friday morning. I said, okay, I'm gonna sell. I don't know what happened. I said I'm gonna sell USD CHF. I did put everything, put stop loss, put everything there. The market went up, my friend. Ooh, market went up a lot. I know. So it turns out that CHF didn't gain strength. It lost strength against the US dollar. So that's where I was wrong. I made some loss Friday, but one thing I like about myself, like I know how much I have. I know how much I'm willing to risk, or how much I'm willing to lose. I don't like to say how much I'm willing to risk. I like to say how much I am willing to lose. Okay, cool. Then I put, okay, this is how much I'm willing to lose on this trade. Okay, put everything there. Then I lost that amount of money. Okay, so cool. Okay, so cool. But I know how much I have on the account, which is on the trading account. Then I know how much I have on my bank account. So the difference is there. Okay, I have this amount. Okay, so I'm cool. Even if I lose this one, okay, cool. I have something on my bank account, so I won't complain a lot. But I will be hurt a little bit, but I won't be traumatized. Yeah, that's a good word. I won't be traumatized. So yeah, that's it. That's what happened. But I didn't trade. I will show you. Let me try. Let me try and show you what happened on the charts on USD CHF on Friday. Give me a second here, quick. Give me a second here. Okay, let's go and say okay, let's go USD. We trade USD CHF on Friday. So let me show you. I think I did remove the things. Yes, I didn't remove the things. Okay, so cool. I didn't remove the things. There it was. There it is. Let me remove this one quickly here. So this was on Friday in the morning. Imagine, my friend. Friday morning, I was there on my chart, like waiting for everything to go according to my plan. Imagine, to my plan. Who am I? Hey. The market says, no, who are you? So I did everything. I pulled stop loss there. I put my stop loss there. I entered there. It was the time was like, it was 9:15 in the morning. So I put everything there. Okay, sure, cool. Then I waited. I entered around I entered 1 minute before. I entered 1 minute before the news release. I entered there, then I waited for that 30 seconds, for that 60 seconds, I mean. So the market went down, went down, went up, went down, went up. Then 9:30 exactly, the market went up, my friend, a lot. So it hit our stop loss there. So we were fine. We moved on. We managed to move on and live with it. So we didn't like hang ourselves because we had a risk management. Very important. Many people they trade, but they lack one thing: risk management. So if you lack risk management, you can be in problem, you can be in trouble. So look what happened here afterwards. Like the market, let's remove this thing. So every time we know price what? Price cycle. Price cycle happens each and every time. So consolidation, expansion, break structure, retracement to those imbalance that was made by that impulse movement earlier. So it came back and tapped these things, then it went up. Look what I'm talking about here on the charts. So we have this thing. This is our consolidation. Let's say this is our consolidation. This is all consolidation. This is all consolidation. This one. Then this is an impulse movement to the upside. Did it break the structure? Where is it? Where is it? Okay, let's see. Okay, yes, it kind of did break this like this high. Then it went down. It's called this movement, this break movement. It's called a retracement. It retraced to those imbalances over here. Then afterwards, tap there, fill the imbalances, then continues to go up. But I didn't see these ones. Didn't see this. At 2 o'clock Friday. I didn't watch because I left the market that day. I made losses. Then I went out. I left the market. I went to do something else. But beautiful as like tap back, then continue to go up. The overall of the market, like on USD CHF, is a bullish trend. It's a bullish trend. So we made losses, but we learned from those losses. Like we learned from those, because I made loss. If I have stayed until that imbalance to be filled again, then entered and buys there, then I could have made more than I've missed out. In get a point, because that movement like went up, but it came back down, tapped these imbalances, then went up even more than that previous rally. Get a point? So that is what happened that day on Friday, but I didn't make any profits that day. But this week, it's a new week, a new day. We go forward, my friend. We move on. Get a point? So yeah, let's go back on the things again. Let's go back. We were here talking about these things called the news events, news release, and everything. So now we are here on this week. We are here on this week on the 3rd, 4th, 5th, 6th, 7th, 8th, 9th. So on this week we want to do something like we are waiting for. Look at this. Where is it? Yeah, this is what I'm talking about earlier. We're talking about the presidential election. It's gonna happen the whole day tomorrow. The whole day you're gonna be like, you're gonna see like some consolidation there. The market won't move on one direction. It'll be like consolidating until the results comes out. Then after that, we'll see some movement. So we can anticipate those movements. So that's it. So this is what I like. I like to wait for these things. So I want to show you, like, I think the week of CPI. This is USD, GBP, all these things, USD, GBP, USD CAD and stuff. So it gives us a clear indication when we have also NZD, GBP, and so forth. For example, on the 13th of this month of November, we're having CPI on USD on 3:30 p.m. in the afternoon. So we are going to wait and see what is the forecast. What are they going to say? Sometimes they are correct, sometimes they're incorrect. So we got to be very careful of what they say. we got to be very careful to make more research, gather our own research, and compare our own research and their research, as the website says. Okay, they say, okay, this is gonna happen. So what have you gathered for yourself? Then you compare them. If you say, okay, it's gonna be an inflation taking place in the month of November, USD, so we're gonna be like trading against the US dollar. So we go ahead, do that, then we wait and see what's gonna take place. We make money because December is around the corner, guys, around the corner. So you gotta be making money. So yeah, guys, I don't want to make the video too long because I believe the video is already long right now. But I haven't edited a video yet, but I know this video is going to be very long, very, very long. But I believe this is a video with very important information, very, very important information. So let me show you one more thing. November, we did have, like, with the first of CPI, we have NFP. NFP was here, NFP was with NFP US dollar, NFP there. This was the previous result. This was the forecast. Then this was the actual result. So I believe it went down. I don't like trading NFP. I didn't monitor anything. I don't know. I just see this thing right now as I'm talking to you right now. I don't know what happened. Either go up or down, but I think it went up or something. I'm not sure. But let's move on from there. But I want to show you when it's gonna be, and our next NFP is gonna be next month, 1st of December NFP. So first Friday of NFP. So, but on the 13th CPR 13th. Okay, sure, cool. I like CHF. We have GBP here, CPI GBP on the 20th of November, 9 a.m. in the morning. So it's going to be a beautiful one. So I will be there, guys, waiting. I will trade that one. I like CPI. I like CPI. We make money there, my friend. As I said, we make money. So also CAD, Canadian dollar, on the 19th of November. Time is 3:30 in the afternoon. So we got to be very, very careful and wait for those things. I don't want to be busy on those days. On those days. Sometimes I'm go to work and stuff, do those things, see, because I do something outside, like other than forex trading. I don't do other stuff. So yeah, I want to see CHF AUD 2:30 in the morning. Imagine. So I'll be there trading that one, depending on the forecast and the previous. If the difference is, I would like to trade. If there's no legal to look difference, I don't like to trade that one because it's a waste of my time. So So I want to see CHF. Where is CHF? I like to CHF. I like to trade CHF. CHF I like because it doesn't move like too volatile. It likes settling, move in one direction. It's going up, it's going up, it's going down, my friend. So we make money. I think CHF. Where is CHF? I haven't seen CHF. I want CPI of CHF. There it is. On the 4th of December, we are having CPI of CHF. So we don't have the things yet, the forecast and the things, the actual. I don't have, because the results are released on that particular day and on that particular time, 1:30 whatever the time. So CHF is going to be at 9:30 in the morning, same as their last Friday, the first of November. So guys, the video is too long already, man. I can stay here and share a lot of things, but because of the time, I know you are busy. I know you are busy, guys. I know you are busy, but I like to say to you, do me a favor, subscribe for me, share the video, like the video, and come back again to watch another video, because I will be sharing more videos, like this beautiful content where you can learn to add to your own strategy, because I know you have your own strategy, but I'm here to share what I've learned, what is helping me, and what are my mistakes, and how we can learn from those mistakes and move forward. So I ask you, my friend, my guy, like, listen, subscribe if you haven't subscribed. If you have done so already, thanks so much, my guy. But if you haven't, please subscribe. It costs nothing for you to subscribe. Just subscribe there, like the video. It helps the channel. It helps the channel a lot, because I want to go to another level, my guy, to trade levels. You see, because like we want to reach more people. For us to reach more people, to trade a new community, like for people who has like those vision to be better in their life and make money and so forth and so forth. We got to start somewhere, add and learn together. Like if you want to comment there. If you want me to make another video of whatever video you want me to make, tell me via the comment section. Please talk to me. Then you move forward, guys. So that's it for now. I don't know if what I'm missing. I show you the videos, I show you the websites, I'll show you the charts, I showed you everything. I did explain everything as much as I can, but do something for yourself. Don't just depend on what I'm saying. Go and do your own research as well. Okay, this guy said this. Okay, let me research and compare the things. Because if you take exactly what I'm saying and apply it, no. But add something, do your own research, then it'll be more clear to you as well. Get the point. So that's it for now. The video, I think, is 30 minutes long. I don't know, but I thank you for watching the video until now. Staying on the channel, coming again, subscribe, everything you've done. I thank you. I thank you a lot, because without you, I'm almost nothing. I'm almost nothing. So I need you. And I believe some of you, they need me as well. So yeah, guys, that's it. See you on the next video, guys. I will try by all means, like to post a video, maybe 3 videos a week, 2 minimum. Like, yeah, I'll try because sometimes I'm busy doing so many things other than forex trading. So that's it. Thank you so much. See you. I've said this thing for a very long time now. See you on the next one. Okay, now one more time. See you on the next one, my friend.